just sharing here a bit of a broader business case that we've applied. The way we're looking at this now is saying, wait, we're not Unilever, we're not Danone, we're not a family office keeping this company in our portfolio for 20 years. Let's be realistic and pragmatic. We're keeping those companies for 5 years, 4, 5, 6 years. So what can be achieved in that period of time? So we do a 100-day, like you, a 100-day, 3 years action plan. What is helpful, I think, is kind of to draw a matrix and as soon as you enter, like as soon as the company enters your portfolio and saying, wait, so what is the level of maturity of this company on a CSR standpoint? What is the level, the willingness of the CEO? You have to prod the CEO, the C-suite there, and see, are they even interested to push things forward? Are they open to a discussion on value, on opportunities? If they're not, I think the best way to serve, again, your stakeholders, so your investment team, the portfolio company, and the investors, is to do some risk analysis, and then focus on key areas. Like nobody's Shiva here, and we're not going to solve all the company's issue in 3 years. So, I mean, typically, I'll give you then hence a business case. We had a company, and we still have a company in our portfolio for, I would say, 3-4 years now. It's a Fund 6, previous fund company, and I think for 3-4 years everybody pretended they were not seeing some pretty drastic health and safety issues there. So the metrics were there every year, but nobody was really reacting. And the click happened because we're exiting the company very soon, and suddenly this positive dynamic came up, and because we're envisaging maybe a dual track, and you're thinking, oh, IPO readiness, public markets. So going back to what Raja said earlier, there's pressure from public markets, there's regulation. So what story do you want to say? And we realized it was a pretty sobbing story. So suddenly everything, kind of all the little points start to align, and this is the momentum that as a sustainability manager you want to catch. So in less than 4 months, we've implemented near misses policies, training policy. We have a frequency rate of incident target reduction of 10% in some business units, to 50% by the end of the year, and we're achieving this, which means it was really a matter of the push and having the CEO coming down and saying, this is important for me, this is part of your bonus. And I'm not going to go into what you earn when you have less incidents, but something I can say is PEA I'm not going to tell you we're an impact investor. I mean, that would be proper greenwashing out there. I'm not going to say that, but what we try to do is invest with impact. So there's this distinction: invest for impact, with impact, and we do try and invest with impact, and really try to be as pragmatic as possible, because often the solutions are relying right there. So.